Welcome to the show that takes up no more than 5 minutes of your time, but could help you gain massive real estate knowledge. It's 5 Minutes in Real Estate with best-selling author Shane Willis.
Hello, it's Shane Willis, Pensacola real estate expert, bringing you today's episode. What the heck is going on at the pump? I went to go yesterday. I had a lot of running around to do, had quite a few appointments. I enjoyed being back out of the beach, showing condos. That was nice again. But I had to fill up gas because a little light came on and said, "Hey, you got like 30 miles, and then you're going to be walking," which is not like me. I normally fill up a lot sooner than that. So I pulled over gas station, and this is the first time it's cost me $55 to fill up my gas tank in a long time. I remember having to do that when I lived in Tampa, 2006, 2005, so like 12, 13 years ago. But normally it cost me in the 40s. This one was $55. And so I got to thinking about that for a minute, and I went, Memorial Day. That's what everybody's saying. Well, gas prices always go up during Memorial Day. Well, I don't know about always, but typically that is true. They do go up some during Memorial Day, so I chalked it up to that. But then, of course, when something sticks in my head, it sticks in my head, especially when I'm thinking about what I want to talk about the next morning. Oil as a commodity. It is at a 4-year high. I know this because I trade oil. So oil as a commodity is at a 4-year high. And we're also looking at interest rates at a 7-year high. We started the year off at like 3.9, and now we're at 4.61. Morning! Now we're at 4.61. So what does that have to do with real estate? What does that have to do with mortgages? Well, Freddie Mac just came out with a statement, and somebody was asking, hey, why are interest rates higher? And he said, healthy consumer spendings. Sam Catter, he's a Freddie Mac's chief economist, okay? He said healthy consumer spending and higher commodity prices spooked the bond markets and have led to higher mortgage rates over the past week. Why would they spook the bond markets, and what in the world was I talking about gas for? Well, it seems that oil prices, our price at the pump, and inflation have a strong correlation. If you noticed, when oil prices came way down, and we were paying a lot less, not like, I wasn't paying as much as I was when I was a teenager. That would have been nice. Under $1 a gallon. Yeah, right. I don't think I'll ever see those days again. But if you notice, inflation's been low. It's almost been deflation, not as much in all the industries, but we've been just kind of low inflation, but we're starting to see inflation rise. So the price of the pump is correlated with the oil prices. Oil prices are in the $70 range. With the new sanctions on Iran, that's expected to continue to rise. I have a lot of my experts that think that we'll be at $80 a barrel by the end of the year. So as oil prices rise, there's a strong correlation between that and inflation. And if inflation rises, one of the measures the Fed takes to counter inflation is to raise the Fed rate. If you listened to yesterday's episode, you know they've already done that. They're going to do, the comments are now they're going to do it 2 more times or 3 more times this year. So it's not how are they going to do it, they've already done it. How many more times are they going to do it? How many more times are they going to do it in 19 and 20? So as we get to head out for the weekend here soon, and you're going to fill up your gas tank, whether you're going out in the boat or you're hitting the road, looks like it may be a wet one. So yeah, I'd probably stay off the boat. But, some people are going to go on the boat anyways. You're going to notice the gas prices are a little higher. Don't just look at that as just Memorial Day. That has a lot to do with inflation as well. So as you see prices of the gas pump go up, understand inflation is going up, understand mortgage rates are going up, which means, as we discussed yesterday, and if you looked at the tips and tricks yesterday, I put the graph up, that also means your buying power in real estate is going to go down. Prices at the pump go up, your buying power in real estate is going to go down. We're at 4.61% as your average mortgage rate right now. They expect that to be at 5 at the end of the year. It's amazing how oil's at 70 a barrel. they expect that to be 80. Interest rates are 4.61. Hey, George. Our co-host just showed up. Interest rates are at 4.61. They expect that to be at 5 at the end of the year. Correlation just exists. Every time you fill your gas tank up and it hurts a little more, you can also hear me saying it's going to cost more to buy the same house because rates are going to continue to rise. All right, that's all I got for you today. It's an easy one this morning. Just a little bit of economics first thing in the morning. Go get your coffee. As always, if you have not subscribed to get our tips, tricks, graphs, I do send out some interesting stuff just to our email list. There's post podcast. Get over to 5minutesinrealestate.com. That's 5minutesinrealestate.com. Also, if you have not subscribed on either iTunes or Google Play to get updated as soon as we get updated, this is episode 92, I believe. And we get updated quite frequently. Make sure you get over to one of those players of choice and get subscribed. And finally, if you found value in this or any other episode, I never ask for money. It costs me money to do these things, but I don't ask you to pay me for it. Instead, I ask that you share the information on social media. Thanks for listening. Have a great Wednesday. Wednesday? Oh, I need my coffee.